Assalamualaikum warahmatullahi wabarakatuh. Hello everybody, my name is Naufal Fashilla Indria Siswanto. You can call me Fasha. I'm University of Indonesia student, and at this time I will present the taxation material in case of VAT of taxable goods import activities. And so let's get started. First, I would like to talk about what is tax. A tax is a compulsory financial charge or some other type of levy imposed on a taxpayer. It could be an individual or a legal entity by a governmental organization in order to fund government spending and various public expenditures. A failure to pay along with acquisition of or resistance to a taxation is punishable by law. Taxes consist of direct or indirect taxes and may be paid in money or as its labor equivalent. Next, I would like to move on to general tax. General tax refers to a tax that applies to all or most goods and services and where all are taxes at the same rate. And it says tax refers to a tax on a single item which may be different than the tax levied on other items. And next, value-added tax or VAT. VAT involves the transfer of taxable goods or the provision of taxable services in Indonesia, events or services that are taxable. First, deliveries of taxable goods in by an enterprise. Second, import of taxable goods. Third, deliveries of taxable services by an enterprise. Next, use or consumption of taxable intangible goods or services originating from abroad. And the last one is export of taxable goods. It could be tangible or intangible or services by a taxable enterprise. And the last is value-added tax or VAT, known in some countries as a good and services tax, is a type of tax that is assessed incrementally. It is levied on the price of a product or service at its stage of production, distribution, or sale to the end consumer. If the ultimate consumer is a business that collects and pays to the government VAT on its product or services, it can reclaim the tax paid. It is similar to and is often compared with a sales tax. Next, VAT rate. Generally, the VAT rate is 10% in Indonesia. However, the exact rate may be increased or decreased to 15 or 5% according to government regulation. And what is import? Import are foreign goods and services bought by citizens, businesses, and the government of another country. For instance, PT ABC imports vehicles from manufacturers in Japan. And second, I bought albums and merchandise of BTS from Seoul, South Korea. So this is the import activity statistic in 2018. We have 3 lines. For the green lines for the raw material support, and for the blue line for capital goods, and for the last line, the orange line is for consumption goods. Next, we have import activity statistic in 2019. It's the same too with the last one. So the first line for raw material support, and for the blue line for capital goods, and the last line, the orange line, for consumption goods. Next, I would like to move on to custom value. So custom value is classified into 3 types. First one, free on board or FOB. FOB is the price of goods based on transaction value. It could be seen on proof of transaction, invoice, etc. Second, we have freight costs. So freight costs are set for delivering packages. If the price of the goods equal to free shipping, it means the price of the goods includes shipping costs. And the last is insurance. So we have to calculate for the price of goods plus freight cost first. After we got the result of price of goods plus freight cost, it's times with 0.5%. And for the rest of import duty or in Bahasa, Tarif bea masuk equal to 7.5%. And next, how to calculate it? As you can see on the last slide, rate of import duty is 7.5% times with custom value. For example, in this case, we are purchasing album and merchandise of BTS in USA. The total price is $121, and for the freight cost is $35, and exchange rate 1 USD into rupiah equal to 14,000 rupiah. And next, we are talking about custom value. The formula of custom value is FOB plus freight cost plus insurance. So for FOB and freight cost, we already got the data. And for the insurance, we have to calculate it first of 0.5% times with 156. So 156 is the result of $121 plus $35. And the result is 0.78. And we get the custom value result, and of total of custom value will be converted into rupiah. So 1 USD equal to 14,000 rupiah. And after we calculate the custom value, we have to calculate the import duty or bea masuk in bahasa. The formula is custom value times with 7.5%, and the amount is already rounding in rupiah. Now, we are talking about tax formula. So tax formula is tax rate times with import value. And for import value formula is custom value plus import duty. And basically the tax rate of VAT or PPH is 10%. The tax rate of income tax or PPH is classified into two types. The first one is 10% in case we are having taxpayer identification number or NPWP, and the second one is 20% in case we are not having taxpayer identification number or NPWP. Next, now let's count it for the import value. So the import value formula is custom value plus import fee, and so we get the result. And next, for VAT, the formula is VAT rate times with import value, 10% times with import value, and we get the result too. Next, we are calculate the income tax. For income tax, it's classified into two types. The first one is 10%, so the formula is 10% times with import value, and we get the result. And the last is the tax rate is 20% times with import value, and also we get the result. So as you can see, for the income tax, if you don't have taxpayer identification number, is higher than if you have a taxpayer identification number. Finally, let me explain in the summary. In summary of VAT of taxable goods import activities, the first step we have to know the amount of reward, shipping, and insurance costs. The amount of custom value will be converted into exchange rate in rupiah. After we get the amount of custom value, we are moving on to calculate the import duty amount.